Every nation on earth is drowning in debt. The United States alone owes over $38 trillion, the highest figure in human history. The European Union follows with $14 trillion, Japan with $9 trillion, and even oil giants like Saudi Arabia or export powers like Germany and China carry mountains of debt. But here's the paradox. If everyone owes, who exactly is owed? Debt isn't just a burden, it's the skeleton of the modern world, the framework beneath every boom, every war, every collapse. It's invisible, but it shapes everything we touch. Follow the trail of creditors long enough, and you reach a strange truth. The world doesn't owe money to someone else, it owes it to itself. Yet that doesn't mean everyone wins. To understand how humanity built a civilization on IOUS, we need to go back to the beginning, to a war, not a marketplace. In 1694, England was running out of gold, fighting a costly war against France. The king turned to merchants for help. In exchange for future tax revenue and permanent interest payments, they financed the crown. To manage this system, they created something new, the Bank of England. It was revolutionary. For the first time, a government could spend money it didn't yet have. In return, lenders received something equally valuable, a promise backed by the state that could be bought, sold, and traded. That promise became the government bond, the seed of the modern financial world. France copied it, the Netherlands perfected it. The newly born United States used it to finance its own revolution and westward expansion. From that moment, debt stopped being a symbol of weakness. It became a symbol of power. Empires once conquered land to seize gold. Now they issued bonds to collect interest. The battlefield had moved from the field to the balance sheet. Fast forward 3 centuries, debt is no longer a tool. It's the bloodstream of the global economy. Every government borrows. Every citizen lends through savings, pensions, and taxes. The world now carries over $315 trillion in total debt, nearly 3 times the size of the entire global economy. That's not a statistic. It's a mirror reflecting how the system truly works. Let's start with the United States, because America's debt isn't just national, it's global. Of that $38 trillion, roughly half is publicly held, owed not to other parts of government, but to investors. About 2/3 of those investors are American. Banks, pension funds, mutual funds, insurance companies, and the Federal Reserve. The remaining third, about $9 trillion, sits in foreign hands. Japan leads with about $1 trillion. China follows with roughly $800 billion. Then come the UK, Luxembourg, and Belgium. So when people say America is in debt to China, it's true, but only for about 2% of the total. Most of America's debt is owed to America itself. The Treasury issues bonds. Banks and funds buy them. The Federal Reserve often buys them back, creating new dollars in the process. Then taxpayers pay interest on those bonds, which flows back into American retirement accounts. The circle closes. The debt is real, but the creditor is mostly a reflection in the same mirror. And this loop doesn't stop at America's borders. It's global. Japan lends to the U.S. through Treasury bonds. The U.S. lends to Europe through the IMF. Europe lends to developing nations through the World Bank. And those same nations lend back to richer economies by parking reserves in Western debt. It's a planetary loop of promises. Every nation holds someone else's IOU. Every promise is secured by another promise. It's like a poker table where everyone borrowed their chips from the player next to them, and the only rule is no one leaves the table. Behind every government bond lies a web of institutions, hedge funds, pension funds, sovereign wealth funds, and central banks managing tens of trillions of dollars. They are the true arbiters of credit. They decide which nations can borrow cheaply and which must pay a premium just to survive. When they lose confidence, currencies collapse, governments fall, and entire economies can be restructured overnight. Democracy decides who governs. Markets decide who survives. And at the top of this pyramid stand the central banks, the high priests of modern finance. They don't just manage debt, they create it. Every time the Federal Reserve or the European Central Bank buys a government bond, new money is born. One institution's liability becomes another's asset. Every dollar in existence represents a debt somewhere else. There is no such thing as debt-free money. Every coin, every bill, every digital dollar carries an invisible IOU on its surface. For decades, this system has sustained itself through one fragile thread: confidence. As long as investors believe governments will keep paying interest, even if they never repay the principal, the machine keeps turning. But when that belief falters, history repeats its harshest lessons. In 2010, Greece's debt became unpayable. Bondholders panicked. Yields soared. The European Central Bank and IMF stepped in, but their rescue came with a price: austerity. Taxes rose, jobs vanished, pensions shrank. For an entire generation, the word bailout became another word for sacrifice. In Argentina, repeated defaults turned debt into a national curse. Each rescue came with conditions that deepened inequality. And in Sri Lanka, when foreign reserves ran dry, fuel shipments stopped, the government fell, and streets filled with protests. Every time the system breaks, the same pattern emerges. The creditors, once invisible, become visible. The IMF, the rating agencies, the bondholders, all tightening the noose on a desperate state. And yet, even after collapse, the cycle restarts. Old debts are replaced by new ones. Default becomes rebranding. The same machine, same mechanism, just a different name on the balance sheet. Because in the modern world, debt isn't meant to be repaid. It's designed to be rolled over. Governments don't plan to clear their debts. Not now, not ever. That's not a conspiracy. That's policy. When individuals take loans, they're expected to repay them. Governments don't play by that rule. They refinance, issuing new bonds to pay off old ones. Economists call it rolling debt. Interest becomes the real product, the rent charged for stability. The global economy depends on that rent. Like a shark that must keep swimming to breathe, the financial system must keep borrowing to survive. The United States will never pay off its $38 trillion debt. It will refinance it forever. Japan has done the same for decades, now owing more than 250% of its GDP. And yet, its bond yields remain near zero. Investors aren't waiting to be repaid. They're waiting to renew the deal, because to them, government bonds aren't liabilities, they're assets. They're the world's safest collateral. Pension funds rely on them. Banks use them as security. Central banks treat them as money itself. If governments ever tried to pay back their debts completely, the system would collapse. Banks would lose their most stable asset. The supply of money would shrink. Deflation would crush the economy. The cure would be worse than the disease. So instead, governments do the opposite. They keep issuing debt rhythmically, like a heartbeat for capitalism. Every new bond pulses through mortgages, pensions, and global markets, keeping the illusion alive. When politicians talk about balancing the budget or paying down the national debt, they're selling an illusion. The goal isn't to eliminate debt, it's to keep it believable, serviceable enough that no one loses faith. Because once faith fades, numbers stop mattering. Confidence collapses, interest rates spike, and the global machine built on rolling promises grinds to a halt. That's the real secret of sovereign debt. The plan was never to pay it back. The plan was to keep the world believing it will. This entire system depends on one fragile thing: trust. As long as the world believes government debt will be honored, the illusion holds. But trust isn't evenly distributed. When we say we owe it to ourselves, that's only half true. Interest payments don't flow evenly through society. They flow upward from taxpayers and workers to the institutions and investors that own the debt. Debt is not just a contract between countries, it's a transfer between classes. The system rewards those who own debt and punishes those who pay it. That's why inequality and indebtedness rise together. They are two sides of the same machine. The global economy functions like a pyramid, not of conspiracy, but of confidence. At the top sit the investors and funds who lend. In the middle, governments that borrow. At the base, citizens whose taxes guarantee repayment. As long as the base keeps believing, the pyramid stands. But if belief falters, if people begin to doubt the value of the promise itself, the entire structure trembles. And this is where the illusion becomes dangerous. The modern financial system has turned debt into money itself. Governments issue it. Banks multiply it. Investors trade it. Citizens depend on it. The line between debtor and creditor has blurred beyond recognition. When you deposit money in a bank, you're lending to the bank. When that bank buys government bonds, it's lending to the state. When the state spends, it borrows again from you through taxes and inflation. It's the same circle, tightening, spinning, accelerating. Debt once meant bondage. Today, it means balance. But if that balance ever breaks, if confidence collapses, the illusion ends, and the world remembers what debt truly is, a promise that cannot be kept forever. So what happens when the machine stops? When the next crisis hits, when interest outpaces growth, when nations can no longer roll the dice forward? The answer isn't simple because there is no single creditor to blame. It isn't China, it isn't Wall Street, it isn't the IMF. It's all of them, and us. We are all part of the same engine. Governments that borrow, banks that multiply, investors that trade, and citizens that consume. We are the borrowers and the lenders, the taxpayers and the bondholders, the believers and the deceived. That's why every major collapse, from Greece to Argentina, from 2008 to the next one, feels both personal and abstract. Because in truth, the collapse is not of money, it's of trust. Debt is the oxygen of the modern world, invisible, essential, and toxic in excess. It allows nations to grow, wars to be fought, and innovations to flourish. But it also concentrates power in the hands of those who control credit. When governments promise infinite repayment, when central banks promise endless liquidity, when citizens stop questioning the system, the illusion becomes complete. Until one day, confidence flickers, and then everything built on promises begins to fall. In the end, the debt illusion is not a story about money. It's a story about belief. Because the modern economy doesn't run on gold, oil, or even labor. It runs on trust, the most valuable and most fragile currency of all. So when people ask, who does the world owe? The answer is simple and terrifying. It owes itself. But the real question is, when the promise breaks, who will still believe? If this gave you a new perspective, subscribe